Hey, Next Levelers, Bob Gibbons here, ready for another great week, learning from people that have gone before us, starting companies, building things, and we're here to learn from them. This week, our guest is George Seay, and George is the chairman and founder of Annandale Capital. They've been around in Dallas for about 21 years as Annandale Capital, although he's from Dallas, I believe. And
That's right.
All your whole life, right?
Fifth generation Dallas, seventh generation Texan. So
wow, you don't say that with any kind of pride, do you?
None.
We'll get into some of that.
Probably too much pride.
So Annandale Capital, you can find them online at annandalecap.com, and I'll spell Annandale for you, so you don't have to pull out the.
It's a mouthful.
Well, you know, otherwise they're going to go to Google. So it's ANNANDALE cap.com. Welcome, George. Glad you're here.
Thank you, Bob. Good to be here.
So let's just go ahead and tell folks, what is Annandale Capital? What's your sort of 30-second elevator speech on what you tell people you do?
Sure. Well, I'll give a little intro into the name first because it's an unusual name.
It is.
It's a region in Scotland that Robert the Bruce was from. It's funny, the movie Braveheart is about William Wallace, who was the great rebel peasant in Scotland in the 13th century, but actually Robert the Bruce's nickname was Braveheart. It was really, that really more referred to him. He was the gentleman who was a noble in Scotland, also in the 13th century, who liberated Scotland from the English after a 20-year civil war, roughly. It took him almost 20 years to win the crown and get the English back into England. And the Annandale region is what he was the lord of before he became king. So I like the Braveheart story, and I'm half English and half Scottish, so that's why we picked that name. All the other good names were kind of taken already by hedge funds or private equity funds. And Annandale Capital is a global investment company, and we invest across the world without any conflicts of interest, and our only purpose is to serve our clients with excellence and put investments in their portfolios that will serve their interests and protect their wealth first and grow it second.
Interesting. So world, that's a big –
it's big.
It's a big place.
It is a big place.
So, I mean, the first thing that brings to mind then, or the first question it brings to mind when you talk about world, how can you possibly – review investments from the whole world and decide which ones your clients should be going into?
Well, I like to think of the concept of signal and noise. And the vast majority of all investment information and investments out there in the world are noise. In other words, they're not going to do you any good. So you have to be a ruthless pursuer of signal. The best investments out there in each asset class, and there's multiple asset classes. And we, for many years, have literally circumnavigated the globe looking for things to invest in. So I've done business in Sydney, Australia, and Tokyo, Japan, and Singapore, and Hong Kong, and Zurich, and London, and as well as all the major investment capitals in the U.S. And we've gotten pretty strong opinions about what to do and what not to do, and where to look and where not to look. So it focuses the mind because you don't have enough time in the day to look at everything. So you've got to kind of focus in on things that you think are going to work and work extremely well, and only focus on those particular things unless there's a compelling reason to look at other possibilities.
So when you're looking at those, are you only looking at publicly traded companies and investing in stocks and bonds, or are you looking at other private investment opportunities?
My company was started in 1998, and for the first 6 to 7 years, we only did U.S. stocks and bonds and directly investing in individual stocks and individual pieces of paper. And well over a decade ago, we expanded out into private investments too. So we do private equity, we do oil and gas, we do real estate, we do hedge funds, we do venture capital, as well as the more liquid public stocks and bonds.
Wow. I mean, that's just such a daunting range of options.
It is a lot of options.
I mean, you don't have a giant company in terms of numbers of people in the company. So do you leverage you got to have relationships in all these other places. So is it mostly people bringing opportunities to you and then you matching up the investor with the right opportunity? Or are you out there seeking those opportunities and sort of soliciting them as well on behalf of clients?
Well, one of the nice things about being in business for over 2 decades is you start to figure out where you should be looking and where you should not be looking. So, for instance, we did quite a bit of private equity in Asia for years, and I found out over time that not only are the returns not that good because governments over there are not as friendly to capitalism as they are over here,
Yeah.
but you're illiquid for an extended period of time. So that's really not a good place to fish. So we tend to fish more in waters that are conducive to high returns and getting your money back as quickly as possible. So although our team is small, it doesn't take a large team to manage large amounts of money effectively as long as you're doing the right investments for the right clients in the right way. So
Right.
we've recently focused more on public stocks and bonds, private equity with general partners that we know and trust very strongly and who have a lot of their own money invested alongside our clients, and then oil and gas minerals, which most people are not familiar with, that we've developed a particular expertise and specialization in, and real estate. So those are kind of the areas we focus. We do some venture capital or startup businesses, but that's not really what we're good at. So we don't think hardly anybody is any good at that.
Yeah.
So that's a difficult area to be in. And then we used to do a lot of hedge funds, especially around the rest of the world, and we got convinced several years ago that the typical hedge fund fee structure, which is 2% management fee and then 20% carried interest without any hurdle rate, is too high a fee, and you're never going to do that well economically for your clients. So we don't do as many hedge funds anymore.
So explain the difference between hedge funds and private equity. What's the difference in those two?
Hedge funds typically invest in liquid instruments, stocks, bonds, credit default swaps, futures, things that you can invest in on the public markets and you can get in and out of pretty quickly. And typically they have a 1-year lockup where your money's tied up for a year, and then you can get it every month or every 3 months thereafter. So it's more liquid, whereas private equity or private businesses, private investments, private assets, and typically your money is tied up for a much longer period of time.
Okay. And so who is your ideal client?
Someone that we can serve. I view our company as a service business, and we're there to be a good steward of someone else's wealth and assets, and whether they're institutional or individual or a family or whatever the class of the client is, we just want to serve them and be their steward, a faithful steward, trustworthy steward of their capital, and not only protect it but grow it effectively. So if it's someone we respect and admire and enjoy being with and want to work for, that's a great client. And typically we take larger engagements because we do sophisticated, difficult things that require pretty large minimums in a lot of instances, not the public markets but the private markets. So our stated minimum is $5 million US to invest for someone. Our average client size is around 10 to 15 million. We do take clients smaller than 5 million who, if we want to work for them.
Yeah.
So we do have flexibility there, but we just like helping people. I'm in business to help people. So if we appreciate someone, like someone, want to serve them, then they'd be an ideal client.
Yeah. So you don't. It's sort of the no jerks rule.
Yes.
You don't. If somebody's difficult, they're going to be kind of a jerk to you. Then it doesn't matter how much money they have. You don't want to mess with them.
When I was young and dumb, I wanted anybody because I wanted to grow a huge firm, and I was very aggressive. And as you get into your 50s, as I am now, the no jerk rule is a big deal. You don't want to work for people who are not going to appreciate or respect what you do for them. You want to work for fine people and of high integrity that you're honored to work for.
Yeah, and I've actually fired a few clients, not many, but a few, and I've never regretted it because it's just life's too short, as you point out. And like you, I'm well into my 50s now, as the gray beard will testify.
Life's too short, and if you see something negative early on, it's probably going to repeat itself.
Oh yeah, without a doubt. So these clients could be wealthy individuals, families, pension funds, college endowment funds, et cetera. Are they all domestic U.S. entities, or do you also have clients from other places?
They're all domestic. I've wanted to expand overseas on multiple occasions, and I worked really hard to expand in Britain. But the reality is that geography tends to trip you up in terms of getting clients very far afield. People do like to basically get in front of you on occasion and be able to access you quickly. And if you're in different time zones and geographically far away, it's hard to do that. But we do have clients all across the U.S.
Yeah, I mean, you and I were talking before we started recording, and I just got back from Austria and Germany. You just got back from Israel. So I was 7 hours different from Dallas. You were 9 hours difference from Dallas. So that gets to be a big challenge. And in fact, my son is doing a technology company right now, a startup, and they have clients all over the world. And he was telling me about a interaction he had with somebody on the phone in I believe it was India. So they were 11 and a half or 12 and a half hours difference. So that can be a major challenge at times. But don't you experience that, though, with the investments that you're putting your domestic clients into?
You do. But we typically, when we're investing overseas in public securities, it's funds. And usually the holding period is quite an extensive time out. So you're not worried about day-to-day fluctuations in the market. And when you're doing private investments overseas, your holding period is multiple years. So you don't really need to access that fund on a day-to-day basis.
Right.
So it really hasn't been a problem for that.
Interesting. So now what does the big picture global investment world look like right now? Where are you seeing the opportunities, and where are you saying stay away from that area?
I think that's where investments are difficult for people. Is everyone wants instant gratification, and they all want to be a millionaire.
That's why I have
overnight.
you on the show. I'm expecting to make a lot of money here.
And we've had a bull market for 10 years now,
Yeah.
and that's a very old bull market. So we've been telling clients to really moderate their expectations and expect that if they get a mid-single-digit return the next 10 years on a blended portfolio, stocks, bonds, that's something to be satisfied with, because it's going to be really hard to make money the next 10 years. You'll make some money, but with more volatility, and the returns are going to be lower because the prices are too high on almost every asset class out there in the world, whether it's real estate, whether it's stocks, whether it's bonds, whether it's private equity. Things are just overpriced. The only place that we think that there are bargains are oil and gas minerals.
But what about just from a geographic, political standpoint? Are you okay investing in anywhere in the U.S. and the world, or are there certain places like, I don't know, some continent that you would say stay away from that continent, or we see big opportunities in this continent?
We're comfortable everywhere, but it depends on the timing and the price you have to pay for something. We're very favorable on emerging markets and in international stocks right now, because the price you have to pay to acquire $1 of earnings in emerging markets and international developed stocks is much lower than in the U.S. There's about a 30 to 40% differential in the price.
Wow.
So prices over here are much higher. So we've been telling clients to have at least some of their stock money overseas currently.
Okay. Well, very good. We're going to take a quick break. Be right back. Welcome back to The Next Level. We are talking to George Seay, and he is chairman and founder of Annandale Capital. Check him out online at annandalecap.com. So in the intro, we were kind of laughing about the fact that you were fifth generation Dallas, seventh generation Texan. Is that right?
That's correct. Yep.
So give me a little background of that. I mean, that's a lot to live up to.
Yeah, my ancestor was named John Cartwright, and he first set foot in Texas in 1819, which was pre-Stephen F. Austin, pre-Texas as an independent country, pre-Texas as a state.
Where'd he come
by
from?
decades. He came from Tennessee. Most people who came to Texas early on came from Tennessee or Louisiana or someplace pretty nearby, or Virginia. And I always joke that that's nothing to be super proud of, because if you came to Texas in 1819, all that were here were Native Americans who didn't like you, or bugs, or mosquitoes, or mud, or oppressive heat, and so you were either broke or you were running from the law, or both, if you came to Texas in the early 19th century. So,
wow. And which was he?
I don't know. I haven't researched that well enough. I think
Some things you don't want to know.
I think my grandmother would box my ears for saying that and say he was a very fine, upstanding citizen.
Of course he was.
But I don't know why you'd come to Texas back then. There was no air conditioning. So
no kidding. But there wasn't anywhere else either.
That's true.
Tennessee
but it was
can be
really
pretty
hot
miserable in the summer.
Yeah.
So he came here, and what kind of business did he get into?
Well, like all enterprising folks who came to a brand new place to live, he and his son opened a general store in St. Augustine, Texas, which was one of the first Anglo settlements in backwoods East Texas, right on the Louisiana border.
Oh, wow.
And his son Matthew became the second largest landowner in the state. He acquired almost 400,000 acres over his life from the profits from the general store. And I like to say, a lot of people like to look at the Alamo or San Jacinto or some of these heroic Texas battles, which they are heroic, but the reality is everybody died at the Alamo, and my ancestors were running the general store in backwoods East Texas, and they weren't fighters, they were traders. So that's why I'm here today, is they were trading instead of fighting.
That's cool. So you guys have been around a long time. How did you end up in Dallas, or how did the family end up in Dallas?
Well, my mother's side of the family went from St. Augustine to Terrell, Texas, 30 miles east of here, and her mother went to University of Texas and was a Pi Phi in the sorority there, and married an up-and-coming Highland Park graduate named Bill Clements, who never graduated from college, and so he founded an oil and gas drilling company after working for Oil Well Supply for years, and they moved to 14 different cities in 12 years before they finally settled in Dallas.
Oh,
my dad's people moved here in the late 19th century. That's where I'm fifth-generation Dallas from, and the Seay family's been around Dallas for multiple generations, and they were more professionals. They were lawyers and doctors and professional people. So they've been in Highland Park for 5 generations now, whereas my mother's people came 3 generations ago.
So Bill Clements you mentioned, which is a well-known name in Texas. So Bill Clements, your grandfather, was it? That
Correct.
Was the governor of Texas for how long?
8 years. He was the longest-serving governor until recently. And
Wright Perry.
Yeah, that's right. And he was quite a character. He was a lot of fun.
I remember. Yeah,
he had a big personality.
He did. And when he went out of office in 1990 or 89.
91, that's correct.
91.
Yep.
So he was being replaced either by Ann Richards or Clayton Williams. And as I remember, I voted in that. I was living in Austin at that time, and Clayton was killing it. He was going to have this thing. He just couldn't shut up. And he made a lot of bad jokes.
Terrible jokes
that
and I know
cost him the election.
Very, very well, and he's a wonderful guy. But
I bet.
His sense of humor is very colorful and rubs people the wrong way sometimes. So that's what cost him what would have been a layup run for governor. He would have won by 10% if he just kept his mouth shut and rode his horse around. But unfortunately, he said 2 or 3 things that really rubbed people the wrong way.
Interesting.
Especially women.
Yes, exactly. So you were instrumental in your grandfather's campaign, weren't you?
I wouldn't say instrumental. I'd say I was comic relief. I was 19 years old in his last campaign. I was a freshman at the University of Texas, and he allowed me to be his travel aide on his last campaign. And he lost his second run for public office because we were in the worst recession since the Great Depression.
Yeah.
And even though he did an incredible job as governor his first term, the state was still very Democratic, and people were out of work and unhappy, and the Democrats had a big resurgence, and he lost. And the other reason he lost was they had polls showing them ahead until the weekend before the election, and they couldn't battle back fast enough. And also he had double hip replacement surgery right after the election. His hips were bothering him, and he was grumpy the whole time.
Wow.
So my big part of my job on his third run, which he won, was to just let him have a good time and help him to stay in a good humor the entire time. Because campaigning for governor is a 16-hour-a-day, 7-day-a-week job. It's very, very difficult.
Cannot imagine doing that. So as his travel aide, you're what, packing up for him and getting all this stuff together, and I mean that's got to be
driving the car, and whatever's required. I remember one time that was really funny. There's this hotel in Houston that I think is now a St. Regis or Ritz-Carlton. It was called the Remington way back when. And I was responsible for getting everybody their keys to their rooms when they checked in for the night. And I went up to my room that night, and I had this like 2,000 square foot suite. And I had this fruit basket and complimentary wine and all this kind of stuff. And being 19, I wasn't smart enough to realize I got the wrong room. And the next morning, my grandfather, who was 5'9", he had this funny way of being only 5'9", but being able to look down on anybody he was talking to over his glasses. He said, "What did your room look like?" And I went on and on about how great my room is and how big it was and how wonderful it was. And he's just kind of looking at me, and I went, "That was your room, wasn't it?" And I said, "Am I fired?" And I survived that. But
but he's going to bunk in with you the next night.
We had a lot of fun.
That's hilarious.
It was a great experience. I went to over 60 Texas towns at age 19, and I was very partisan Dallas. I love Dallas. I've always loved Dallas. It's my home. But to my great chagrin, I realized I liked the rest of the state better than I liked Dallas after going to all these wonderful small towns.
Oh, there's a lot of good stuff in Texas.
Texas is a great place. It really is.
Yeah, I moved here in 1981 after graduating high school in California. My dad was in the Army.
Yeah.
So he retired from the Army and then became a college professor at a little tiny Christian school south of Fort Worth. And so I moved with them and went to school here, and have pretty much been here ever since. I had a short stint in L.A., short stint in Austin, but with the exception of about 3.5 years, I've been here since I was 18 years old.
It's changed a lot since then.
Well, I married a girl from Dallas, so
Yeah, there you
she was
go.
born at Baylor downtown. So, yeah, when I moved her to L.A., that was not a pretty sight.
Yeah, I'll bet. I was born at Baylor too.
Oh, yeah.
Yeah.
Well, so what did all the politics teach you?
Basically how important it is that government stays out of the way of the private sector, that the vitality in our country and in our people is in the private sector, and that government's job is to do all the basic blocking and tackling of life, whether it's public safety, whether it's transportation, whether it's water, whether it's power. Its job is to do all those with excellence to where people never even think about government. If people are thinking about government, it's problematic because they're usually screwing something up. It's like what Ronald Reagan said years ago. The 8 most terrifying words in the English language are, I'm from the government and I'm here to help you.
Yeah.
Because they usually don't help, they usually hurt. And now you have to have effective regulation so you don't have the problems we had with the trusts in the early part of the 20th century. Rockefeller's Standard Oil and J.P. Morgan in the banking business and Carnegie in the steel business. You've got to have rules that make it fair for everybody. So pure capitalism tends to crush a lot of businesses unfairly. So you got to have that. But once you've got that in place, let the private sector work its magic. Capitalism raises the tide for everybody. Boats all go up when capitalism is left to work its magic.
Yeah, there's no better way to do it. On a very small scale, I serve on the Planning and Zoning Commission in Plano, and it's been interesting because I'm very much a property rights guy. You know, I own the property. Let me do what I want. But at the same time, there's a balance to that. And,
there is. And
so sometimes we get into some pretty difficult decisions and discussions about what decision we're going to make on this particular issue, because I don't want the government, the city, telling me what I can or can't do with my property, or citizens coming to do that. But there's a balance, like you said. So there's got to be moderate regulation, but get out of the way and let me earn something and create jobs and all
it's
that.
A dance. It has to be a very skillful, artful dance. And I think one example of that's on the seedy side of life is the Patriots owner getting apparently caught going to massage parlors in Palm Beach. You don't want a massage parlor that is engaged in sex trafficking, getting illegal aliens doing all sorts of nefarious things under their roof and being in slavery next door to an elementary school. You know, there've got to be regulations that govern how our society works, and you want to make sure that you don't harm your culture and harm the family and harm your community by how you regulate and how you legislate.
Well, and sometimes the regulation creates the problem, and some people argue that in that example you just gave is that the regulation of that industry actually creates the trafficking problem, where if it was legalized, then there wouldn't be the need for the trafficking. I don't know which is true. It's interesting because sometimes the regulation is the problem and sometimes it's the solution. And it's not always clear in advance which it's going to end up being, which is hard. So you also serve in a lot of different civic capacities, and one of the interesting ones right now is that you're on the Israel, I don't even know the right name. Give me that again.
Yeah, it's the Texas-Israel Alliance, which is designed to dramatically increase the amount of business we do between Texas and Israel. And it was very compelling for me because usually when you think of Israel, you think of the Palestinian issue or you think of the Judeo-Christian religious heritage in that country. And to do something that was purely economic and was designed to raise the standard of living in Israel and in Texas and have businesses doing a lot more business back and forth was very appealing to me. So we just did a trade mission over there for 10 days, and I'm also the chairman of the Clements Center for National Security at the University of Texas, which is designed to inspire young people either at the undergraduate, master's, doctorate, or postdoctoral educational level to pursue careers in national security to serve their country. It's a conservative but nonpartisan, patriotic institution that tries to get people to go teach national security policy at universities. It's very out of favor because most universities are so left-wing they don't want to talk about national security or defense, or to go work in the Department of Defense or the military or the State Department or the CIA or other national security governmental institutions.
Have you had a successful career selling to businesses? Maybe tired of having your income limited by arbitrary compensation plans that penalize you for selling more. If so, you should consider tenant representation, a specialty within commercial real estate. At Riata Commercial Realty, Inc., We represent companies and nonprofits that occupy office buildings and warehouses. There is no limit on income, and the more you produce, the higher percentage you keep. If selling houses at night and on weekends sounds good to you, don't call us. But if you want to work business hours, have unlimited income, and leverage the relationships you already have, we want to talk to you. Please visit us at texastenantrep.com. That's Texas, Texas, tenant, Tenant, rep.com.
We are back talking to George Seay of Annandale Capital. Check him out online at annandalecap.com. So, George, before the break, we were talking about your work with the Texas-Israel Alliance. I screwed that up again.
You got it perfect. That's exactly right.
Texas-Israel Alliance,
yeah.
Right. I was listening. Amazing.
We used to call it the Texas-Israel Chamber of Commerce, but we thought that sounded like a bunch of very old white Anglo men sitting around a table eating Lubies, so we changed the name.
So now it's still the same thing. They're just not at Lubies anymore?
We just call it the Alliance. It sounds very dynamic.
So you're involved in that organization, and you're building trade between the countries, which between Texas and Israel. I guess Texas is not a country anymore, although sometimes we act like it is.
We like to think of it that way.
And we also like to think that we actually could go back to that one day if we wanted to, but I don't think that's actually true.
That's correct.
So how does that play into your business? I mean, why are you doing that?
You know, it actually doesn't play into my business, unfortunately. I did meet with 3 very compelling venture capital firms while I was over there. One is headed up by the son of Shimon Peres, who was prime minister of Israel for 3 terms. His name is Hemi Peres, and they run $2.5 billion in a venture capital fund. And then I met with a second fund that's run by a man named Marius Nacht, who was one of the co-founders of Checkpoint Software, and he runs $700 million in a venture capital fund. And then one called Our Crowd, which is a kind of a fund of funds for venture capital. So there might be some business to do there, but the reality is the executive director of the Alliance cold called me 2.5 years ago, and I took a meeting with her, and the first meeting, asked me to be the chairman of it, and I said, "Are you kidding? I don't need another commitment." And after 4 or 5 months of solicitation, I finally agreed to take it over, just because I care about Texas and I care about business, and I'm fond of Israel because I'm a religious person. So I took it on and really enjoyed it. But there's really no direct correlation with my business. It's from a pure standpoint of maximizing the profit of my business, it's a grand waste of time and money. But it's pro-Texas, so I like it.
You know, I've seen a lot of these business junkets to Dubai or other places in the world, and I've been very interested in those. I've really wanted to go, but I couldn't really draw that direct line to how is that going to impact my business in a positive way, or is this just a way to go get a sort of a semi-vacation? And so I haven't gone on one yet, but I still have interest in that. Given what you've done now, I mean, do you think from a business standpoint that business owners should do these things even though they can't make that direct connection, or should they only do it when they can make the direct connection?
I think most business owners would laugh at doing things like this because it takes them away from I think they think they've got enough of a challenge being there for their families and running their business effectively to making enough money, so they just don't pursue things like this. I'd pursue things like this because I get bored if my life gets too two-dimensional, so to speak. Right. I like to have my fingers in a whole lot of different things, and I think that helps me acquire additional knowledge in areas that I wouldn't otherwise have it, and I think that not directly but indirectly benefits my business because I've now got contacts at the highest level of the Israeli government and in Israeli business. So if I ever do want to do business in Israel, I have got multiple contacts that I can tap into to do that.
So the members of this organization, I assume, are on both sides of the people in Israel, people in Texas. How big is it in Texas? I mean, how many members do you have, or are they all trade people? Or
mainly businesses, yeah. And we've got about 15 board members, and then we've got several businesses that back what we do and support. We have multiple conferences over the years. We've had one for water because Israel's got dynamic water technology. We've got one in the next fall for life sciences technology. We had a cyber security conference last spring that we had the Secretary of Energy, and we had the Israeli Secretary of Energy, and we had the former head of the Israeli Defense Forces, or IDF Special Forces, come speak about cyber on. So it's crosses a whole lot of different industries, and we've had support in the past from Elbit Systems, which is an Israeli defense manufacturer, and AT&T, which is headquartered here in Dallas. And we visited when we were over there last with Dell Computer, which has a large presence in Israel. So it crosses a whole lot of different companies and industries.
Interesting. Yeah, it sounds fascinating. I'd be interested in learning more about it. But like I said, it's hard to know how to connect those dots. And there's so many different things to be a member of. You kind of have to.
You got to pick and choose.
You got to pick and choose. You can't do everything.
I know that if the annual trade between Texas and Israel, which is around $1 billion U.S. right now, dramatically increases over the next 5 years, that we will have been successful. That's what we're trying to do. Yeah,
and $1 billion is just not that much money.
It's not that much.
So
That's right.
I'm actually surprised it's not bigger than that.
Me too.
So that is interesting. So why did they want you to head up the organization since you didn't have a direct connection to Israel, and from a business standpoint, I mean?
Yeah, I think it's because the board was heavily Texas Jewish, and they wanted a few Gentiles in there. And also, I have a reputation for getting things done.
Okay.
And being effective. So I think they wanted to tap into the fact that I am foolish enough to spend a lot of time, energy, and money on things that don't directly benefit my business or my family. So they have effectively tapped into my time, energy, and money to support this cause. So so far we're having a great time doing it.
So are most of the trade, that $1 billion in trade, is it mostly with Jewish families in Texas or Jewish businesses in Texas?
Mainly companies. AT&T has got a research facility in Israel that has over 1,000 employees, and
wow.
Dell has 3 or 4 facilities over there and well over 1,000 employees. Intel has got a tremendous operation over there. So it's mainly large U.S. companies doing business in Israel, but there's quite a few Israeli technology companies over here in Texas. Checkpoint Software, which is the largest cybersecurity technology firm in the world, has got a significant presence here. Elbit Systems is near Fort Worth. They do a lot of subcontract work for Lockheed.
Okay.
Noble Energy found one of the largest gas fields in the world offshore Israel, which has given Israel its energy supply for the next 100 years at least. Most people think of Israel as the only country in the Middle East that doesn't have fossil fuels, but they found significant natural gas now. Noble Energy out of Houston is doing that for them. So there's more contacts than you would think. The only reason that California and New York have much more business with Israel is because Silicon Valley and California, Israel is called the startup nation because it has a lot of venture capital, so they're drawn to Silicon Valley. And then New York has a huge Jewish business community, and they are drawn to Israel in that respect. But Texas actually is a much better fit for Israel than the other 2 states because we're so business friendly. So it seems almost inevitable to me that will increase over time.
We had a guy in the show a while back by the name of Yoram Solomon up in Plano. And Yoram teaches at SMU, and he's done it. He did a startup when he was after he got out of the military in Israel. Then he did a startup in Israel, and then ended up in Silicon Valley, and then he got hired by TI, came to Dallas anyway. So I didn't really realize how big a startup and technology hub Israel really is.
Yeah, it's significant.
Interesting. Well, let's go back to talking about the Annandale Capital then. So Annandale was not your first company that you started, was it?
My first company was called Seay Stewardship and Investment Company, which is a mouthful, but I really like the term stewardship because it usually has religious connotation, but it's got a very strong secular meaning. It basically refers to a trusted individual who takes care of something really important for people. Mm-hmm. So I wanted my company to be all about stewardship of the assets that are entrusted to us by our clients. And we changed the name to Annandale Capital because I went on a hiring spree and hired almost 15 people, and they all told me that I needed to get my name out of the company name so that it was more about a company than an individual. And I said, well, that makes sense to me. So we changed the name to Annandale Capital, and we went from pure stock and bond investing in the U.S. to all asset classes all over the world.
Interesting. So whenever you started the company, why did you start the company? Why didn't you just work with someone else?
Yeah, I wish I could say I had a really compelling reason why I did it, but the bottom line is I started my career in the U.S. State Department working for the Secretary of State at the time, Lawrence Eagleburger. I was his aide, and then I went to law school, and I became a lawyer, and I hated practicing law, and I went back and got an MBA and a Chartered Financial Analyst designation, which is the top designation you can get in the finance industry. And I actually went around looking to buy a business, and every deal I saw was marginal at best, and I finally realized I was getting the deals that nobody else even
wanted.
wanted to look at.
Yeah,
and my accountant offhand breezily told me that he'd refer me business if I started an investment firm because he'd seen my investment returns. And I went, that sounds like a good idea. And my great uncle Charles Seay, who lived here for his entire life, had done really well in the investment business and had mentored me. And so that kind of led me down that path. But it was basically I didn't know what else to do, so that sounded like a good idea, and I did it. And the ironic thing is my accountant only referred me one potential client over 10 years, so he really didn't help me a whole lot. So
wow.
it was a slow beginning.
Well, but I mean, so he saw your tax returns, and he saw the kind of returns you were making in your own investing, and that's why he suggested you get your own company?
That's right, yeah. From 91 to 98, I made 29% a year.
Wow.
So I did really well, but I was taking an awful lot of risk to get that kind of return. That's the thing that most investment advisors don't disclose to their clients or prospective clients, that if the returns are significantly high or potentially significantly high, it means you're taking a ton of risk. So we don't take that level of risk for our clients. We're much more in terms of preserving first and growing second, but growing the maximum amount we can grow someone's assets with the unit of risk they're willing to take. And not everybody wants to take a whole lot of risk. Most of our clients want to take a moderate level of risk.
So when your accountant gave you this great idea to start your own company, what did you do to start the company? I mean, how did you start it? I mean, you had no clients.
That's right. Well, I had some people who were aware I was pretty good at this and wanted to bet on me. So I started with $17 million under management. So I was break even from day one, which is unusual.
Wow.
I was 31. I had one employee. My father officed with me because he wanted to hang out, which was nice. He was a lawyer. But the first 4 years were very, very slow. Who's going to hire a 31-year-old with no relevant experience to handle their money for them? Nobody is. So
apparently $17 million said they somebody was.
I think they were more betting on me than my skills and expertise in the field, but it all worked out well. We have discretion over just under $500 million in assets currently, and we advise on close to $3 billion in assets now. So it all worked out in the end.
So what does that mean? You know, managing, I assume you're getting an asset management fee, but
Correct.
Advising, how do you charge for that?
You get a monthly retainer. You don't charge a percentage fee of assets under management like you do if you have full discretion over the money that you're allocating. You're just providing advice to large institutions or families or individuals, and they make the decisions on it, and you're paid a monthly retainer for helping them do that.
Does that mainly look like they come to you and say, hey, we're thinking about making this investment. What do you think? Or is it more you telling them, I think you should be investing in XYZ?
Both.
Okay.
Runs the gamut.
Interesting.
It's an ongoing dialogue, and you meet on a very regular basis to just go through all the solution set and what's possible and what's attractive out there. And right now there's very little that's attractive, so it's complicated.
We're going to take another break. We'll be right back. Welcome back to the Next Level Show. We're talking to George Seay of Annandale Capital. You can find him online at annandalecap.com. So, George, whenever you started this company, you called on, I mean, the $17 million you got, I assume, probably came from like family and friends for the most part.
That's right.
What was your step? What was your marketing plan to go beyond that and start getting sort of, quote, clients that were not connected already somehow?
Well, one of the assets of being young and dumb is you're young and dumb. So you think you're going to pull off starting a business from scratch when most people would say you're crazy to make the attempt. So I didn't really have a strategy or plan to grow. I thought I was such a wonderful person that everybody was going to deluge me with business, and it was the polar opposite of that. I didn't have hardly any new business for 4 or 5 years, so it was very, very slow going. And I think one thing I learned about starting a business is you have all this glamour and bling around Silicon Valley and business startups, and the reality is much harder than that. And the reality is that most startup businesses fail. I think it's 75-80% fail within a year or two, and then most of the rest fail sometime after that. So you have to have a certain level of tenacity and stubbornness and perseverance, and we persevered. In right after I started my firm in 1998, the year before, you'd had the Asian flu where Asian currencies collapsed and there was a lot of turmoil in the market. And then in 1998, Long-Term Capital Management, which was the largest hedge fund in the world at that time at $4 billion, failed and nearly dragged the entire global financial system down with it. 1999, you had the massive tech bubble, and for a person who cares about price like me, it was very frustrating because the only securities that were rising in value were the bubble technology stocks that were crazy priced. And then you had the terrible bear market of 2000 to 2002, which was the worst bear market we'd had since the mid-'70s. And then my firm finally started growing after that because we'd been in business long enough that people were willing to take a chance on me. And then you ran into the even worse bear market of 2007 to 2009, November 07 to March 09, where the S&P went down 57% from peak to trough. And I'll never forget waking up at 6:30 a.m. in Jackson, Mississippi, going to see clients, and the market was going to open, the Dow was going to open down 900 points that day, and I did the math, and if it did that for, I think it was 8 more days, or maybe it was 9 more days, something like that, it would be at zero. So I was thinking, how in the world am I going to keep the lights on and pay these 15 or so employees I had at the time? And so we've persevered, and we've created compelling enough investment returns for our clients that they stick with us and they refer us business. And we've mainly grown through referral. Cold calling and mass marketing just doesn't really work in my business. It's mainly a referral type business.
Okay, so in that first few years where you were not growing, it was because you weren't asking anybody for business. You were hoping that they were referring when they saw the great returns you were doing.
Well, I asked, just nobody was buying what I was selling.
Okay, fair enough. So,
I had these goals of building this gigantic global leviathan of a company and managing $30 billion in assets or more. And as time has gone on and I've hopefully matured and grown up a bit, I've realized that the benefit of being in business is serving the people that you work for, and that's the compelling nature of business. So I don't really care how big we are at this point. I want to grow, but the main thing I want to do is serve people who need help.
Now, you've had some challenges along the way. You've mentioned the bear markets that have happened, the crashes that have occurred. You've also gone from 15 employees, and today you don't have 15 employees.
I don't.
So, what did those people go away at those times when you had the crashes in the market, or were there other circumstances?
Well, I basically built a global investment platform from scratch in 2005, where we expanded from U.S. stocks and bonds to global hedge funds, global private equity, global real estate, global venture capital all over the world. And I had to travel all over the world every year and meet with dozens and dozens of investment funds and managers and investment opportunities. And you got to have a significant staff to do that. So I hauled off and hired. I raised in 2005 half the money from me and half from friends to dramatically expand our business. And we hired a bunch of PhDs and MBAs and CFAs, very highly credentialed people. And I went from making a modest, decent profit to losing gobs of money every year for 3 years. And that will focus the mind very, very quickly.
I guess.
And luckily, the huge bear market from 2007 to 2009 was so bad that a lot of people fired their investment managers in disgust, and they all hired me because we had lost a lot less money than most firms at that point. But I realized about a decade ago that I had a lot of redundancy in my firm, and a lot of people that were highly credentialed and wonderful people, but we just didn't need them.
Yeah.
And we've now got 5 people, and we manage all that money pretty effortlessly with 5 people. I know where to look for investments. I know where to research. I've got a great research team. I've got a great operations team. And we actually function a lot more efficiently and effectively with 5 than we ever did with 15. It's kind of counterintuitive, but it's a good lesson for business that you only want the number of people on the bus that are required to make the bus run as effectively as possible, and you want them in the right seats on the bus, which is also very important. And also margins are what business is all about, not revenue growth, not growth of the firm and head count, but not market share. It's all about profit margin.
I think market share is the worst idea ever.
It's a terrible concept.
Well, I mean, you chase market share for what purpose? If you're not getting any return on that, you're not profitable, who cares?
Yeah. So I got in a pattern of when people would leave the firm because they were redundant or they wanted to go do something else, I didn't replace them. I didn't need them.
So
everybody we've got now is completely necessary to our business. We've got the best team we've ever had, and we function with hyper efficiency, and it's really fun. It's fun to go to work every day.
Would you be where you are today had you not done the 15 people, though?
No, I wouldn't.
So
Because
you had to kind of go through that to
I
get
did.
where you are now?
Yeah, that's exactly right. It was a kind of, trying to put the square peg in the round hole and then finding a square hole for it and all this. It's a trial by error, so to speak, until we finally have reached a point where I wouldn't really change anything we do right now. I think we're very effective.
So what's the biggest challenge to your business today?
I think it would be managing expectations of our clients, because I think that investment returns the next decade are going to be pretty mediocre, and trying to prepare them for that, because I'm not a wizard. I can't manufacture 15% returns when the private and public markets are only going to give you 5.
Yeah.
I can try to get 7, but I'm not going to get 15 in that kind of market environment. So keeping expectations reasonable. And then finding more people we can serve. We've got a lot of excess capacity, and I want to grow the firm, and I want to help people. So those are the two biggest challenges, I think.
What are the challenges to the industry? Are they the same or are they different?
Conflicts of interest. They're very different. I think our industry is just rampant with conflicts where people are paid based on what they sell rather than investment excellence for their clients. And we have specifically set up our business to where we, as far as we can, eliminate conflicts of interest, to where we get paid a percentage fee of what we manage, and we have no incentive to put a client into anything but what is best of class for them.
So you get no
from an
commissions.
investment. No commissions, no loads, no additional fees. We only get paid that percentage fee of assets under management, or a retainer in instances where we are paid a retainer instead of a percentage fee. So the only incentive I've got is to do what's right by my clients. I'm a fiduciary by law, and most investment professionals are not held to that highest standard, and I think it's disgusting. And I think a lot of people in our industry are not best of class. They're not high integrity. They're just trying to sell stuff all the time. And we view ourselves as the antidote to that kind of behavior. And unfortunately, I think most people out there, even people with a whole lot of money, just don't understand the distinction. And they hire somebody they know or feel comfortable with, and they may be constantly sold stuff that they shouldn't be buying.
Yeah.
So we're trying to remedy that every day.
Interesting. You've hit a nerve for me, because I am a big time believer in eliminating conflicts of interest, because in my industry, commercial real estate, I represent the users of the real estate, the companies and the nonprofits that occupy office buildings and warehouses. And I won't represent any landlords, any owners of the buildings, because they have a different motivation, and it creates a huge conflict of interest.
Right.
And yet my biggest competitors, all the biggest commercial real estate companies in the world, they do everything. They represent the owners of the building. They represent the lenders on the buildings. They represent the tenants in the buildings. I mean, it's just on and on and on. They have their hands in 5 different ways on every building, practically,
Right.
it seems. And the frustrating thing to me is clients often don't seem to care.
Mm-hmm.
They come up with some rationalization for why it's still the right thing to do to use the big conflicted companies instead of using a smaller boutique company. My company only has 3 people. You have 5 people. We're both small boutiques. But can we do everything the big guys can do? Yes, except they can make a lot prettier packages.
Mm-hmm.
And they're so big that it makes it makes it look like they have capabilities that they may or may not have. And so anyway, I'll get off my soapbox here, but I'm right there with you on the conflicts of interest thing. So I think it's a huge, huge thing that people have their heads buried in the sands on right now.
I would say frustrating, but the reality is more that it's just sad for me when I see people hire a big bank just because they want a brand name.
Yes.
And I'm not going to name names, but everybody can immediately in their mind pull up 4 to 5 of the most well-known banks out there or investment firms. And what they're really going to get is a rotating team of professionals, because most people at banks who sell investments hop from firm to firm
Yes.
all the time. And they're incentivized to sell stuff. So they've got a product of the month. Almost every month they're going to try to cram into their clients' portfolios. So they may be thinking they're getting a blue chip brand name investment firm to handle their money for them, but what they're really getting is a product pitcher who is incentivized to sell them whatever's coming down the pipeline in the bank's product suite that month, and may be completely unsuitable for the client's portfolio, but they're going to get sold it anyway.
Yeah.
And I'm the antidote to all that stuff, because I don't have anything to sell except my advice and counsel and our ability to find best-of-class investments without conflict.
Yeah, I mean, similarly, I don't care what building a client ends up leasing or buying, because it's whatever's best for them. I'm going to work with them and be aligned with them either way. But, well, George, I'm sorry that our time is up. Thank you so much for being our guest today. Really enjoy it. Listeners, please go to annandalecap.com to learn more. And if you want to learn more about the show, go to thenextlevelshow.com or look us up on social media or on podcast, YouTube, all of those. You can just search The Next Level Show and you'll find us. Be back next week with another great guest.
Thank you, Bob.